Hi, everyone. Happy week. Happy new week. I'm Yaniv, and we'll start immediately our weekly outlook and trading room. Just a quick disclaimer before we start, as always. So obviously, as you know, trading holds risk, and anything I say here during this webinar is for educational purposes only, my own opinion. I'm not here to give any signals to enter or exit or hold a position. If I do take any trades, it's again just for educational purposes, for in order to demonstrate my trading strategies or opinions, but it's not in order to give you any signals of any sort. If you have any questions, as always, just type them in the chat box and I'll give my opinion and my analysis. I'm mostly a technical trader and a technical analyst, so I'll give my opinion. And before we go to the charts, let's just see what this week is holding in terms of financial or economical events. So tomorrow, actually in 15 minutes or less, President Lagarde is supposed to speak. I don't know if it's of any importance today, but we'll see if it has any effect on euro. In Japan, there's a GDP for the fourth quarter. Tomorrow we have in Australia, or tonight, the Royal Bank of Australia meeting minutes. In the UK, all the hours here are, by the way, GMT or UTC. We have the claimant count in Great Britain. We have the German CEV sentiment. We have the PPI in the US. On Wednesday, we have CPI in England after they've raised rates. So interesting to see the upcoming CPI. We have core retail sales in the US and in Canada. And in Canada, we also have the core CPI. We have crude oil inventories. Crude oil has been going, after going up for a while, it went down, started going down today. We'll have a look at it. And the Federal Open Meeting Committee meeting minutes. We have on Thursday employment change in Australia, building permits in the US, initial jobless claims, obviously that's important, and the Philly Fed Manufacturing Index. And on Friday, we have retail sales in England and core retail sales in Canada and the existing home sales in the US. So this is pretty much it. I mean, a solid week, nothing of, some important events, but not too major. The dollar index for now is still going up. I mean, it's holding its positive or bullish sentiment or momentum, even though, as I remind you, a couple of weeks ago, it formed this engulfing bearish candle. So, we may see some more corrective moves, especially around previous highs around 97. So this could affect, of course, other currency pairs against the dollar. It reacted very nicely to this supply zone. If it breaks the supply zone, if it breaches it to the upside, obviously it can go much higher, to around 100, 101. So keep an eye on the dollar index, especially if you're trading US crosses or US major currency pairs. The currency heat map for now is showing a strength of the dollar, weakness of the New Zealand dollar. Other pairs are mixed. Japanese yen is relatively strong as well. Euro and pound are mixed, and we'll see them on the charts as well. And Gold, we'll talk about it in a minute, is very interesting. Crossed or breached the the descending trend line. So we'll talk about that in a couple of minutes. The indices are currently, the index futures, the US index futures are mixed, but on the weekly chart, they look pretty weak. Everyone is talking about the potential head and shoulders in the S&P futures. Not sure if it will eventually happen or not. We have the ascending trend line here serving as support for now, and we have the 50 EMA also as dynamic support. Above it are the 9 and 21 EMAs serving as resistance. So maybe we'll see, sideways movement in the next few weeks. Who knows? Obviously, we'll have to wait and see about the rate decision, the rate hike decision in the US, and everything that's going on between Russia and the Ukraine. Everyone is talking about potential, I don't know, invasion or something on Wednesday on the one hand, on the other hand, trying to calm things down with NATO and positive talks or whatever. But expect volatility this week and in the coming weeks. The markets are on edge. Nasdaq is super weak. It also, after trying to break above this ascending trend line, the yellow trend line for the last couple of weeks, it closed, or even 3 weeks, it closed below it. Sentiment is quite bearish. Still, we have some sort of a support line around here, but overall the sentiment is bearish and it could continue to the downside. Crude oil, especially for those trading Canadian dollar, crude oil started going down today. Not too much. It went even further down earlier today. The overall sentiment is still bullish, and as you can see on the weekly chart, we have this, or even on the monthly chart, we have this supply zone around 100, 102. So it could keep pushing higher or further up to the supply zone before finding real resistance or heavy sellers. Obviously, it can do some corrective moves, even strong ones or significant ones, but overall the trend is still pretty very bullish, and as long as it's forming new highs and keeping its and the price keeps climbing above or finding support above the 9 EMA, the 21 EMA, the trend is still very, very bullish. The 10-year yield, for those who have been following me, that I like watching the 10-year yield, as it can signal the overall strength or weakness of the market, as the debt market, the bonds market is super important for the as a leading indicator of the health of the markets or the fear trading. As you can see here, there's a potential reverse head and shoulders that broke its neckline, the diagonal dashed red line. The overall trend is still very, very bullish, and if the yields are going up, that means people are selling the bonds and expecting the interest rates to go higher. If the 10-year yield goes up in unison with the dollar index, that usually, and especially if we see spikes in the 10-year yield, if the 10-year yield spikes up, this could indicate further weakness and more fear in the markets, which could lead to more selling of equities and bonds, and of course more weakness in markets and strength of the dollar, which means currency pairs against the dollar could go down. Euro dollar, pound dollar, Aussie, Kiwi, and overall, as I said, the dollar index for now is still very, very bullish. I mean, it's showing some weakness, some signs of weakness, but the trend is overall still bullish, and the levels I think that will be interesting to watch are around 97 or so. Okay, previous highs. Let's see if it gets there and how it reacts to this level. And we'll go. Let's now review currency pairs and gold and silver. Maybe we'll come back later on to watch even some crypto coins, cryptocurrencies. So let me just share the MetaTrader screen. Okay. And of course, as I said, if you have any questions, just type them down in the chat box. And if I see anything interesting, while I review the charts, of course, I'll try to take a trade. But it's mostly, the session is mostly to review the long-term trends and watch the major levels, support and resistance. Let me just, I want to start with gold quickly because it's very interesting. I've been talking about this trend line, this blue trend line, for a long time. And last week or last Friday, it broke above this trend line and closed above it. As you can see here, it tested it today and started going up again, and it could continue higher, but be aware of the fact that you know, it's just coming and it reacted already to sort of a supply zone. Not exact, the way I drew it is not so accurate because it's hard in between all these candles to find the exact supply zone. I mean, it could even be a little bit wider. But in any case, what I want to say is that it's getting back to the area of supply from a couple of months ago or even 3 months ago, and it could find some resistance here. And I remind you, as always, gold and silver are very, very volatile. Hi, Lucian. Are very volatile and are also rigged. Their prices are manipulated by big banks, and this breakout could be a false breakout. Silver a few months ago or even a year ago went crazy around 29 or so, and then immediately was pushed down. Everyone was talking about how silver is going to 30 and 40 and 50, and it just got immediately sold off. So these metals, especially gold and silver, are super manipulated and super volatile. Just be careful. If you are looking to go long or short, whatever, make sure you place a proper stop. Don't risk too much, and always be aware of the fact that even though the trend looks like a very solid trend, it could reverse very quickly. That being said, again, the fact that it broke above this trend line, the fact that it's starting to push higher is a good sign for, you know, for gold traders. And if indeed it starts establishing a strong bullish trend, that will give you plenty of time to go in. So don't chase the price, don't chase the market. Don't think that this is the only opportunity you have and you have to take it while it's cheap or whatever. I mean, you will have plenty of opportunities. Let the price let the price show some action. Let the buyers come in and show that they're, you know, taking taking charge of the price and forming a solid bullish trend. This is a war zone. It could, it could end today as a doji or whatever and immediately go down, or it can even push higher and then come down and do a retest. Always preferably wait for some retest. So gold is super interesting, and if you are looking to go long, just wait for some retracement back to either the moving averages, a breakout of previous highs, and then a retest of the highs. Or if you're trading longer term, just wait for some, maybe a potential retest. I mean, it can continue higher from here, obviously, but I do expect that it will do some sort of a retest. And of course, if it retests this area of this trend line or previous high, wait and make sure that it closes above this area, not just touches it, because it could, this could be a false breakout, or just an attempt to lure the buyers and then take the price down. As I said, super manipulated. So would it be good, a good put, no gold entry, or on old? I'm not sure I understand what you mean, Arthur. And Hayden says, I bought silver today. They're going stronger than gold. Any insights why? So again, basically silver also is super manipulated, and many people say that silver is supposed to go or be much stronger than gold in terms of the historical gold to silver ratio. And people expect silver to, in terms of percentage, the people expect silver to be much stronger. For now, as you can see, silver is, it hasn't breached any trend line or any previous highs. So for now, silver is still relatively weak. Maybe it pushed a little bit more, or gave nicer moves than gold in the last few days, but for now, silver is still relatively weaker than gold. But yeah, the historical gold to silver ratio is suggesting that eventually silver will give better returns, or will move more than gold in terms of percentage. Just bought gold, hope a strong move. And again, Diego, nice. I mean, if you bought gold, that's a nice catch. Just again, watch this area, because it's still an area of supply or resistance, and it could turn lower to do a retest, or even break lower and go back before potentially bouncing back up again. Super volatile. Lucian's asking, do you think that liquidity can affect these days or orders in matter of execution? Not sure. I mean, basically, execution is supposed to go relatively smoothly. I have spoken with some traders in the, maybe one or two traders in the last couple of weeks that had some liquidity problems or big gaps during news, especially like 2 or 3 weeks ago, if you remember that session when the Canadian dollar went berserk, like dollar CAD went up like 80 pips in a matter of seconds, and some traders found some problems. But overall, we shouldn't expect too much liquidity problems, even though again, as I said, if anything happens with a surprise rate hike or whatever, or something, God forbid, happens with between Russia and the Ukraine, and I hope nothing will happen there. But if something happens, it could rattle the markets very, very hardly, and or very strongly, and then gaps could make your stop losses, your stops not be filled at the desired price. I remind you, the accounts are, well, at least the real accounts, not the ones that are running on demo like the bootcamp evaluation, but all the other real accounts are running against the liquidity providers, against the real market. And if we don't get filled, your prices or your stops might not get filled. So take that into account. These are real accounts, and you might find gaps in terms of stops in case of strong volatility in the market, in case of I don't know, a war or a surprise rate hike. And I mean, holding over the weekend, yeah, this weekend, be careful with your trades. Who knows what might happen during this weekend, and high gaps during London or New York. I don't know. I mean, overall, for now, at least it's all quiet. But if any surprise comes out in the market, whatever, there could be gaps, definitely. So just be careful, reduce the risk, and take into account that the fact that you place a stop loss somewhere doesn't necessarily mean that it will be filled at the desired price. So always, even if you place a stop loss, reduce the risk just in case, at least in the coming weeks or in the coming week or two, with, I don't know, with everything around rate hikes and winds of war, just take it a little bit more slowly and be careful. So that's about gold. It could give you some amazing opportunities. Just take it slowly and don't chase the price or the market. It will, you know, if indeed it starts building a bullish trend, it won't be a short-lasted trend. I don't think so. I mean, it could start really pushing higher. There's a lot of room, a lot of space here. Remember, gold has been ranging for over a year. It's like, you know, like turning the spring more and more and more. Eventually, when you let it loose, the tighter it gets, the faster or the stronger or the farther or the higher it eventually jumps. A lot of energy has been let's say consumed or not consumed. A lot of it has been built into this pattern, into this triangle or whatever. So this sideways movement. So once indeed the market realizes that gold has broken out and starts moving higher, it could be a significant move. Patience. And yeah, I'm sure there are a lot of buy orders waiting above. So just wait patiently. Don't rush and don't buy into supply zones or resistance. Hold. Wait patiently for a retest, a confirmation, a reversal pattern, or sort of like a price action around, I don't know, for example, here, this trend line, previous high, moving average, you know, confluence of signals, some sort of a price action like a doji, or an engulfing candle, or a morning star, something like that, to show you that the buyers are indeed getting in again at areas of interest, areas of support. So that's for gold. And silver, as I mentioned, is also moving nicely, obviously in unison with gold. It has some resistance areas, these trending lines, but also this supply zone, the daily supply zone. As you can see on the weekly chart, there are some moving averages here that are curling, and you can see also sort of a beginning maybe of the stochastic moving, starting to gain momentum to the upside, crossing the 50 area. But still, for now, silver, unlike gold, hasn't breached any significant level yet, and it could turn around you know, anytime or especially around previous highs or previous supply zones, just like you can see here on the 4-hour chart. So that's for precious metals. Let's go and quickly review currency pairs. So euro dollar found some resistance around the 21 EMA on the weekly chart. It hasn't even tested the previous support line. So the support line hasn't turned into resistance. Maybe, you know, maybe the resistance was actually at these highs, previous highs. You can see here tons of highs, and this one. So it found resistance around here and the 21 EMA. And on the daily chart, it's interesting to see how eventually it will react to this trend line on the daily chart. This trend line, which was support for a while and was breached to the upside, and now could be broken down to the downside. Not a very important line, but still some sort of a reference. Eventually, I mean, we have some horizontal lines. The trend for me at the moment is not very clear. I mean, I thought it would at least test this area of demand, this demand zone, after this bearish candle, but you can see that it already showed some signs of, you know, buyers coming in. On the monthly chart, you can see how it, you know, the moving averages curled or crossed to the downside, and it tested the 9 EMA. On the other hand, on the weekly chart, it formed this bullish engulfing bullish candle, and the stochastic has formed a bullish divergence. So for me at the moment, euro dollar, the trend is not very clear, and at least on the long or midterm, I would prefer seeing some sort of a confirmation either to the downside with lower lows or to the upside with higher highs. Those of you who are trading intraday, you know, the trend at the moment is bearish, but pay attention to this area, to this zone, this base around here with this strong move to the upside. This whole area could serve as demand zone, and it started forming some price action around here, but if you are looking to go long, then at least wait for some confirmation of this price action, maybe another candle to the upside. This could give you a potential at least short-term trend to the upside. And otherwise, if it keeps consuming and starting to go down, just you know, you can enter at a retest of the, well, once it breaks this these lower lows and retest them, you can start going short. But again, be aware of these candles, especially around here, this area. This, you can see that the point of decision around here. Okay, buyers started coming in, retested this point, this area, and from there shot up. So this whole area of 112.80 or so is a strong decision point, and you can see it was resistance, retested, and then a strong move. So 112.80 is a strong decision point for euro dollar. Let's see pound dollar now, if it didn't have any follow through for the weekly engulfing. So that's why I'm saying, Lucian, it hasn't had any follow through for the weekly engulfing yet, but it can find support either around this area, like I said, 112.80, or this previous high, previous lows, this previous, let me just delete this. So around here as well, okay? Either here, this area of demand, as you can see. So the fact that you have a price action like a bullish or bearish engulfing candle doesn't mean it has to immediately follow through with more bullish candles. Okay, it can show you that the buyers are coming in, but then they're going back down and waiting for a better price to go in again. Okay, this is just the sort of get ready. Sometimes it works immediately, just like here. Buyers came in and then immediately went up, but many times it doesn't happen immediately, and the buyers are giving some signals and doing some accumulation, taking the better prices before starting the move. So that's why I'm saying this is, I mean, the overall trend is still sort of bearish on the one hand, but this shows that buyers came in and it can find areas of support around previous points of decision, like 112.80 or 112.30. So just be aware of these areas for now. I would wait for some confirmation either to the upside or to up or down. I wouldn't enter just in the middle of nowhere around here. Yeah, and it can definitely show follow through later. And Diego, you're saying we're in the lower part of the range on pound dollar. We will still see after today's high impact news. So yeah, for pound dollar, I have to say, for me, the trend is not clear. I mean, I said it last week as well. Can't tell you where pound dollar is headed. Even the moving averages can't tell you where the price is headed. As you can see, it's been stuck in between the moving averages for at least 2 weeks, and it's been ranging for a few weeks. So I don't have much to say about pound dollar. Unfortunately, it's just consolidating at the moment, at least on the mid to long term. And even on the short term, as you can see, if you're trading intraday, then you can take maybe very short moves, but even the hourly chart is super noisy. And for now, I wouldn't look for something that has a clearer trend or even clearer support and resistance areas, because as you can see, there are false breakouts to the upside, to the downside. I think for now, pound dollar, at least for me, is not tradable in at least for swing trades, and even intraday, it's harder and unjustified to take this challenge for now. Yeah, and I'll go to the I'll cover the yen pairs in a few minutes, but let's first talk about dollar yen. I spoke about it in length last week, because I said this is a war zone. First of all, I remind you, we're still in a supply zone, and last month it formed this doji candle showing that there's hesitation, there's a war between the buyers and the sellers, and the trend is not, I mean, the trend is still bullish, and maybe it's just moving sideways, consolidating, waiting maybe for the moving averages to get closer and continue pushing the price higher. But for now, we're in a war zone, and the weekly chart, as I mentioned, for 5-6 weeks hasn't managed to break or close above the area of 115.50. Okay, we have one touch here, and then 2, 3, 4, 5, 6, and now we're on the 7th week, just around this price. So either, you know, and you can see that in previous weeks we had a few sort of attempts to break out, and then the sellers came in, but still it's holding, it's still keeping, you know, pushing higher, and eventually if it breaks to the upside, it could lead to a significant move to the upside. Again, the overall momentum is still bullish, but I want to see a significant close above this this area of 115.50, at least on the weekly chart. As you can see on the daily chart, a close of a daily candle is not enough. It immediately goes back and closes below. So a weekly close above this line is what I'm looking for. Obviously, it could give a huge candle to the upside, and then if you want to trade it, you'll feel like you've missed the opportunity. So if you are, you know, if you don't want to miss it and you are looking for an opportunity to go long, you can still try to take trades on weekly, on hourly or 4-hour charts. Once bullish trend, you know, forms, at least here, like here on the moving averages, or on support lines, or whatever system you have if you're looking to go long. But trail your stops, and always remember that you're entering a supply zone, and the price could very quickly turn against you, and so lock in your profits if you're long. If you're short, just remember that you're still in an overall uptrend, and there are some, you know, and the price keeps moving higher. So shorting dollar yen at the moment, or yen pairs at the moment, well, yen pairs, we'll talk about them in a minute because they're affected by other currencies as well, but dollar yen for now is still showing resilience and could push higher. So bear that in mind. I mean, it could fall after these all these candles and sellers coming in. It could fall. Maybe this is distribution, and you can see here, you can see that even though we have some sort of like higher highs, stochastic is giving us lower lows, lower highs. So there is some sort of a bearish divergence, but I'm still referring to the momentum, and it's still bullish for now. Dollar Swiss is also building slowly, gradually, maybe some bullish momentum. You can see that it's been ranging for months and months, but for now, you know, it's holding above the 9 EMA. I mean, it's super noisy. Can't tell you there's any clear trend. Definitely, you know, the Swiss franc is super strong, and even though the Swiss National Bank doesn't like the fact that it's so strong, you know, it's not moving up enough, or dollar Swiss is not moving up enough in other currencies. We'll talk about Euro Swiss in a minute. If eventually dollar Swiss manages to start pushing higher and breach this supply zone, then that will be a good sign for, you know, for the Swiss National Bank, that finally the Swiss franc is losing momentum or losing strength, and we will also be able to remove our margin requirements, or higher margin requirements, from the Euro Swiss, or from Swiss pairs. And we'll talk about Euro Swiss. You know what, let's just have a quick look at it. So Euro Swiss is still inside this demand zone. It has two sort of like price action candles around here, but last week it started pushing lower. And just like you said, Lucien, you know, here again, a strong price action, a strong candle from the buyers, but the follow through didn't come immediately. If this week's candle, you know, closes above this 9 EMA, especially if it's like sort of a doji, or a sort of a morning star, a spinning top, whatever, and then confirms with a bullish candle, then I think, you know, it will start showing more momentum from the buyers, and especially if the monthly candle, if the monthly candle closes above the 9 EMA or closes in a bullish formation, a strong bullish candle, then I think we will take off the margin requirements from Swiss pairs, and we'll finally be able to, you know, be a little bit more calm about the potential intervention of the Swiss National Bank. So that's a little bit about the Swiss pairs. Canadian dollar looks like, you know, it's still moving above this trend line, this ascending trend line, and it's forming sort of a, maybe sort of a candle, a flag, a bullish flag pattern. You can see here, by the way, the last couple of weeks, these candles with these lower wicks, maybe eventually it will break to the upside, and this move will turn into a bullish flag, and then the next resistance will be around this area of supply. If eventually it breaks to the upside, we'll see a strong move of the dollar against the Canadian dollar. And I remind you that it's all coming from this demand zone on the monthly chart. Okay, with this engulfing candle, another engulfing candle here, and what we want to see is a breakout above what was a previous support here and here, that was broken to the downside, retested several times, and if eventually it breaks to the upside, then we can say that this whole reversal move has been completed from this demand zone. Okay, so these bullish engulfing candles are significant. But as you can see on the monthly, on the weekly chart, the moving averages haven't still turned into a compelling or you know, a real bullish trend, or something that is that can give like real dynamic support and start pushing the price higher. So pay attention to dollar CAD, especially to the upper trend line, sort of the upper line of the channel on the 4-hour chart, and even on lower time frames. I mean, if it closes above this trend line on the 4-hour chart, even maybe on the hourly chart, it can give you an opportunity to go long on dollar CAD with an immediate target maybe around previous highs of 128.50, even maybe 129. Aussie dollar, you know, at the time I spoke about this blue trend line, which I thought would be the neckline of this big head and shoulders pattern. It eventually closed below it, but then immediately came back above it, closed back again, and now it tested it twice and closed below it. For me, the strongest support, the strongest zone is around the round number of 0.70. So around 0.70, this is a strong, a super strong support line. Let's see. I mean, for now, you know, the sentiment has, after a couple of weeks with the bullish sentiment, I think that sentiment is turning bearish again. And if you're looking for opportunities to go short, I would first wait for some breakout or of previous lows. Obviously, you have these intermediate demand zones around here, but for now, the sentiment looks a little bit more bearish. If it breaks above, again, if it breaks above this trend line, if it breaks, and you can see here that there is a potential bullish divergence. So obviously, keep your mind open for also a bullish move. But this, for a bullish move, I would want to see, you know, a breakout above and a crossing of the moving averages to the upside. So if the moving averages, let me just annotate here. Wait. So yeah, if the moving averages, for example, start curling up and cross to the upside, and then the price, you know, comes up and retests, especially around the area of crossing, then this is a good place or a good opportunity to go long. Obviously, again, for now, it's a little bit more bearish, but at least on the longer time frame. Let's see. It's kind of stuck in between the moving averages from above and the support line of 0.70 from below. So those of you who are waiting for some swing trades or longer term trades, just wait for a confirmation on either side. Kiwi dollar looks even weaker for now. It's still in this area of demand, in this demand zone, but this weekly candle, as you can see, testing the 9 EMA and previous support line, turning into resistance. This long candle wick from above is for me more bearish, and of course, if it breaks below previous lows, the road is open. The way is open for significant losses on Kiwi dollar after it gave some nice moves in the last couple of weeks. But of course, the immediate supply, if it goes lower, there is some supply around here. Okay, just pay attention. But overall, the sentiment for now is pretty bearish. Okay, first we have this area of support. Okay, support, resistance, support, and now support again. But if it doesn't break higher, if this pattern doesn't turn into a bullish pattern and it keeps going lower and breaks below this support line around 0.66, then we could expect some more losses on Kiwi dollar. Euro pound, not much to say, still kind of compressing to the downside, but we have an engulfing bullish candle from this demand zone. This is a significant price action, and again, maybe we will see a beginning of a bullish move after this long compression, this long accumulation to the downside into the demand zone. A compression into the demand zone and a price action could eventually signal, could give birth to a strong bullish move, as long as this supply zone is not completely consumed and broken to the downside. So all I can say is just let's wait and see if we get another price action to the upside, or if this zone is eventually consumed, and then we have a very long way down on euro pound, which is still, at least on the monthly chart, still bearish. All right, let's quickly review yen pairs. So yen pairs reacted very strongly last week to this area of supply on many charts. So euro yen touched this supply zone and immediately went down very strongly with an engulfing candle. The trend is still kind of sideways, not very clear on the weekly chart. On the monthly chart, can't say much about the long-term direction, but you can see how important it is to keep supply and demand zones on higher time frames on your chart, because they can really give you, if you're long, obviously it can give you a warning sign that you should tighten your stop loss, pocket in some profits, or trail your stop as you're getting close to the demand zone, supply zone, or even look for short opportunities, start to, around price action moves. But yeah, some very significant moves around the supply. Can't tell you right now where it's headed, up or down. The overall trend is still sideways. Same for pound yen, a little bit more bullish for now, but again, signs of weakness around this supply zone. On the one hand, it's just like the dollar yen, it's pushing higher, but it formed a monthly hesitation candle, monthly reversal candle last month. Maybe it's just part of the sideways movement before it keeps, it gets pushed higher and breaks above this huge resistance zone, or resistance area, very long-term resistance area. If it breaks to the upside, I mean, we still have some more resistance above, but that's plenty of room to take a lot of profit. We're talking about hundreds of pips, and this is just to the nearby resistance line. Obviously, if we're looking even longer term, if it keeps pushing even higher, if this was a reversal to the upside, and we're starting to form a bullish uptrend on the long term, then we can get, you can get hundreds and thousands of pips from here. Obviously, months and months, it's not a matter of days or even weeks. But still, we also have some signs of weakness. So let's wait patiently and see. A lot of volatility, a lot of strong moves around this area of resistance, or area supply zone. Let's see first, you know what, let's see if this blue trend line, descending trend line, will go down. And I spoke about Euro Swiss a few minutes ago, but Raushan, so maybe I'll quickly review it, but and EuroCAD, EuroCAD, you mean? Okay, so I'll open the chart in a few minutes. Let's see, Swiss yen. Just like other yen pairs, it's a little bit stronger because the Swiss franc has been stronger. Unlike other pairs that are waiting below the resistance line or supply zone, Swiss yen has breached above this resistance line. Obviously, there are other supply zones hanging above, but there's still plenty of room, and the overall trend is still bullish. It doesn't mean we can't get corrective moves, but the overall trend is still bullish. Maybe now it's sitting again after testing the 21 EMA. It's sitting again on the 9 EMA. We do have a bearish divergence here, which could push the price a little bit or even more to the downside. Maybe even to this resistance line again, who knows, but the overall trend is still bullish. On the daily chart, if you're looking for long opportunities, I would wait for a breakout. I would wait for a breakout of this resistance line, as you can see here. Resistance, support, resistance, a breakout above, and then even a retest on the shorter time frames like H4, a breakout, a small retest on H4 and H1, whatever, will give you a great opportunity to go long. On the other hand, obviously, if it breaks below these previous lows, or even below this trend line, then we could see some more weakening of Swiss yen. Same for CAD yen. Again, the overall momentum is still bullish, but it's stuck below this resistance line around here. Lots of long candle wicks, lots of long wicks from above, showing that sellers are still in the picture here. And just like in another yen crosses and the dollar yen, we have on the monthly chart, we have this sort of hesitation candle. I'm not sure if it's a reversal candle because it's still relatively close to the moving average and it's still within the range. But for now, I mean, if the weekly chart starts pushing higher, we can see that it's still sitting on the 9 and 21 EMA. If it keeps pushing higher and breaks above this resistance, we could see further moves to the upside. A break below a break below this trend line could give some more significant losses, maybe to this area of support or demand again. So again, most yen pairs are pretty much the same. Maybe Euro yen, maybe Aussie yen and Kiwi yen are a little bit weaker because Aussie and Kiwi have been a little bit weaker, as I mentioned, and you can see that Kiwi yen is showing the same patterns, just like the Kiwi dollar, with this, long candle wick coming from below the moving averages. The moving averages are curling down now or crossing to the downside. This is more bearish, and as I mentioned, the Kiwi itself, the Kiwi dollar, is relatively bearish. Okay, so I see that that gold is still pushing higher. So again, maybe that was the retest. Who knows? Let's see how this day ends. If it manages to close in a bullish formation, or maybe even above this supply zone. Again, remember, the fact that it's going higher now doesn't mean that it will necessarily continue immediately higher. It could reverse and retest the trend line, okay, before continuing higher. It can happen in a matter of hours or even days. And as I said on silver, silver is currently inside this supply zone, and overall, yeah, it's in a in a bullish move for now, just because gold is also moving higher, but it has much more resistance above it. If it's the trend lines, if it's previous supply zones. So if you're, the sentiment is still bullish for now, but wait for areas of support. If you want to enter long, for example, wait for it to maybe retest support on shorter time frames, just like here. Yeah, this if you're trading intraday, maybe this retest, or well, the hourly chart looks more like sort of a reversal pattern for now, but a retest or a breakout and a retest above this area of supply can give you an opportunity to go long. I wouldn't go long immediately right now because of this, because there's a lot of resistance around here. Yeah. So Diego, good luck with your gold position. Let's have a look at Euro CAD and Pound Kiwi. Euro CAD. Euro CAD looks to me more bearish for now. I mean, at least in the longer term, as I said, I think I analyzed it in the past. You can see that it's forming lower lows. It broke below below previous lows on the monthly chart, and it's below the moving averages. And on the weekly chart, we have some bearish candles. The only thing right now that is keeping it from going lower is that we have these, you can see here, sort of demand zone. It's been consumed a little bit, but there is an engulfing candle here. There is an engulfing candle, even a stronger one here. So sort of buyers are coming in. We have a bullish divergence. But if you are looking for a long position, actually this is not a bad area to start looking for long around these moving averages. It's kind of choppy. I can't say there is a clear support area, maybe around here more or less. Not even. I mean, it's quite choppy. But those of you who are looking to go long, wait for some reversal to the upside on the daily chart or whatever, or wait for previous areas of support, for example, around here, or maybe, yeah, sort of like this intermediate demand zone. Again, it's quite noisy and can't say there's a clear trend, but it looks like buyers are starting to come in on the one hand. On the other hand, the monthly chart is still relatively or pretty bearish for now. If the monthly candle finishes like a strong bullish candle, then I would definitely start looking for long opportunities on the daily chart, on the 4-hour chart, or whatever. Even here, the 4-hour chart, I mean, it could go a little bit down, but it looks like it's weakening. It doesn't look like a very strong downward move for now. As for, say, EuroCAD looks kind of bearish, was going to short this morning, but thought it wasn't clear. Yeah, and he stopped. I think it's a good decision. I mean, if it's not very clear, and I can't say, I mean, for now it's bearish, but still it has some support, dynamic support around here. And if it's not very clear, preferably wait a little bit longer for clearer signs. And okay, and that's for the Euro CAD. Excuse me for 1 sec, please. Excuse me, I'm sorry. Just had to take a very quick call. So that's for EuroCAD, and let's have a look at pound Kiwi, and maybe we'll finish with that. Let's see. This looks like something is off with the chart here. There's a gap that, yeah, let's wait for the chart to refresh for a sec. In the meantime, as it rebuilds itself, I don't know why there's this gap here. Oh, okay. Not sure why it's in the meantime. Okay, yeah, okay, now it looks okay. So yeah, the trend for now looks to me more bullish, definitely. There are some signs of weakness around here. Obviously, we're entering a big area of supply, but still, if the daily chart or even the 4-hour chart, as you can see here, if it closes above this trend, above the resistance line of 205, more or less, a close above it, preferably even a retest, but a close above it could push the price higher. The overall momentum is still bullish. We know that the New Zealand dollar is relatively weak, so I think many Kiwi pairs like Euro Kiwi, Pound Kiwi, whatever, even Swiss Kiwi could continue higher. Again, There is a lot of noise here, a lot of supply, or uh, kind of a big supply zone on the monthly chart. Let me even make it a little bit more accurate, as you can see here. But it on the in the long term, it can continue pushing higher, and even in the short term, I think there's room for maybe 100 or so pips to the upside. But first, we need to get a confirmation, at least on the 4-hour chart, a clear close above the 205 resistance line. Inverted on the weekly chart, inverted head and shoulders. Well, can't say. I mean, a little bit far-fetched. I know what you mean, like a shoulder, maybe head and shoulder, but this shoulder, I mean, yeah, very. It's not after. It's not coming from a downtrend. The shoulders are very shallow, or the head itself is almost at the same depth of the shoulders. But yeah, there is some sort of a more bullish sentiment to this pattern or this long move. But at least at least on the short term, just wait for the 4-hour chart to close above the 205 if you're looking to go long. Otherwise, for a short position, if either wait for a double top to form, or if you're looking, if you don't want to wait for the double top to confirm, then at least wait for some price action around here if it reverses. There's a strong bearish divergence in the stochastic, but it could go away once it breaks to the upside. So either a break to the upside, at least on the 4-hour chart, preferably even on the daily chart, breakout, and then maybe a retest, but at least a breakout for a starter position. If it forms some sort of a reversal pattern around here, evening star engulfing, bullish, bearish engulfing candle, whatever, then it could definitely form a nice opportunity to the downside. So yeah, lots of things can let's have maybe just a very quick look at the you're welcome. Let's maybe a very quick look at Bitcoin for those of you who are interested in the cryptocurrencies. All I can say, at least about Bitcoin, is that on the one hand, it formed this bearish candle, this weekly bearish candle below the moving averages that have crossed to the downside. So this is, on the one hand, pretty bearish, but on the daily chart, the price is still sitting on the moving averages that are starting to maybe turn a little bit to the upside. The critical area, I think the critical resistance area or resistance zone is around 44,000 to 44,500, more or less. Okay. Confusing, can say. I mean, the weekly chart is more bearish on the one hand, but on the other hand, the daily chart for now, at least as long as the daily candle remains above these moving averages and above the more or less 41,000 support line, we might expect, or we might see some more upward momentum or more upward movement. Anyways, we can talk for hours about many more currencies and other instruments. I remind you, the coming days could be very volatile. It talks about interest rates. It talks about war between Russia and the Ukraine, and I hope nothing happens there and it all ends up in diplomatic ways. But just be careful, reduce the risk. Keep an eye on gold. Very interesting. to see how gold eventually turns out in the coming hours, in the coming days. But it could give you some very nice opportunities, and other pairs as we've covered as well. So yeah, we all hope it will end peacefully. Thank you. Have a peaceful week. Have a successful week. Have a golden week. And we'll see you next week. Thanks a lot. Take care, and have a happy week. Thank you.